The Los Altos Chamber of Commerce. We have a live broadcast here with Lonnie Gary of Young, Craig and Company. Welcome, Lonnie.
Thank you. Hi, Kim.
Thank you so much for joining us today. Lonnie is a past board chair for the Mountain View Chamber of Commerce, and Young, Craig and Company, of which he is a partner, is a proud sponsor of events here with the Los Altos Chamber of Commerce as well. They have dual membership in both organizations and support both Mountain View and Los Altos in that way. So we really appreciate that. Lonnie is a tax expert and makes tax presentations to organizations and other professional groups. He's also a member of the Los Altos Rotary Club and Mentor Tutor Connection, which we also appreciate. And Lonnie's here today to share his expertise in the PPP program in helping our businesses understand what procedures and protocols to follow in order to get granted forgiveness for PPP loans. So thank you, Lonnie, and I'll let you take this away, and we'll ask some questions in conclusion.
Okay, thank you very much. So let me share my screen. Hopefully this will work. Is it working? No? There we go. Okay. So I wanted to talk today about PPP, the Paycheck Protection Program, loan forgiveness. And, this program has been a very interesting program, a very good program for many businesses. Although in following this program, I feel a little bit like the dog who chases the car and then catches it and doesn't quite know what to do. So before I get into the meat of the program, I wanted to talk a little bit about the timeline, and this will give you an idea of kind of how things have progressed. So probably somewhere around mid-March, I think around the 13th is when we let our people go. So that the pandemic, the coronavirus pandemic, was labeled a disaster, a pandemic by the government. And soon after that, legislation followed to provide relief. And so we're going to focus on the relief for small businesses under the Paycheck Protection Program and the effort to try to keep people working. So on March 27th, the CARES Act, the Coronavirus Aid, Relief, and Economic Securities Act, was signed into law. It had two sections in it dealing with the Paycheck Protection Program. And I'll talk a little bit about that and what that really means. But this timeline just gives you an idea of how things progressed, how rapidly and how often. On April 2nd, there was interim final rule issued, really laying out what the Paycheck Protection Program was to do and how it was to operate. Essentially, this is all out of the Small Business Association. Right after that, there was a lot of questions by professionals that everything in the Paycheck Protection Program seemed to be focused on employees and employee wages and payroll costs. And so the question then came up, well what about self-employed? Do they get any relief, and how would that work? And so the following day, there was guidance for self-employed. Then somewhere in May, well, let me back up by saying in the Paycheck Protection Program, there was a section on loan forgiveness. So the PPP essentially was a loan. There are guarantees and so forth that I'll get into. But then there's also a provision to make that loan forgiven. And so then there was a rule that was issued on May 22nd, the first loan forgiveness rule, indicating how the loan would be forgiven and under what terms and things of that nature. And I believe there was also around that time that they talked about owners, so partners and partnerships and S corporation owners and so forth. They had to give some guidance. So throughout this period, there were FAQs, frequently asked questions, that were issued. And sometimes the FAQs got out in front of the forgiveness, the loan rules, the interim guidance. Sometimes they followed up after the interim guidance. And at some point, the government said, you know, you can rely on the FAQs, you can rely on the guidance. Let's just get this done and make it work. June 1st, there was guidance on requirements governing forgiveness because, once again, the guidance that was issued wasn't clear enough. There were more questions than there were answers to some of these questions. You know, a lot of this reminds me of how the government works sometimes. It's ready, fire, aim. So they got ready, they shot, they opened up the program, and then they started taking questions on, well, gee, does this make sense? Oh, it doesn't, huh? And so we got into some guidance. On June 5th, there was a new law. The Paycheck Protection Program Flexibility Act was created because there was a new round of funding. We were reaching towards the end of the original covered period. And since there were some inherent problems with the Paycheck Protection Program with regard to getting forgiveness, this Flexibility Act was created. It loosened up some of the rules with regard to forgiveness, and so we'll go over some of that as well. And you see here it amends the CARES Act, and it added a revision to the first interim final rule, which was basically how the program operated. June 11th, there was an interim final rule revising the first Paycheck Protection interim final rule, additional guidance. June 17th, more guidance. June 22nd, more. You get a pattern here. So the government is struggling to keep up with the ambiguity in the guidance that was issued, address some of the issues that had not been issued up until that point. And that gets us closer now. August 24th, there was additional guidance for owners. As I said, by now, everyone understood that self-employed people, even though they didn't have employees, were eligible for the PPP program. Partners in a partnership were eligible, and they were not considered self-employed. They had their own standard. They were considered business owners. People with greater than 5% ownership of S corporations and C corp owners, all of these people had to have guidance as to what the limitations were and what rules that they would be following. And then there was rumors, you know, after, you know, in September and into early October that the SBA was going to issue some guidance to make it easier for people to request forgiveness that had small loans. And that's the majority of the loans out there were small loans. As you know, you could go up to $10 million on the loan program, but essentially most of the loans were, I'd say, under $100,000. That more than 50%, certainly 60% were under $50,000. So they issued this guidance on the loan forgiveness rule for businesses taking out $50,000 or less in PPP loan. We were hoping that it would be $150,000. That was the rumor, that it would be for $150,000, but they came up with only $50,000. And that's probably because I think about 2/3 of all the loans were $50,000 or less. So the CARES Act. So the Coronavirus Act essentially modified Section 7A of the Small Business Act. So the Small Business Association, Small Business, I lost their name, but anyway, the Small Business Group, they handle loans to businesses under the Small Business Act. And the PPP essentially modified Section 7A, which already had a structure for giving loans to small businesses, so that the government didn't have to create a whole new program out of whole new cloth. So these PPP loans had a covered period that was February 15th to June 30th. This is the original period. The CARES Act guaranteed these to 100%. There was a 1% interest rate. You could defer the payment back, a 6-month deferral after the end of the period, and a 2-month maturity. And so this was a pretty nice program, because at the end of all of this, you could request forgiveness. And so that was a very good part of the act, is a very reasonable loan if that's the way you had to go, but you could actually get the loan forgiven. So in order to qualify, a business had to certify certain things. You know, you made an application to the Small Business Association, and the business had to be in operation on February 15th and had to have employees. Of course, there had to be guidance after that to say no, self-employed people didn't have to have employees. But in any case, they made some adjustments. And then you're making this request for loan due to the uncertainty of economic conditions of the coronavirus situation. So you didn't really have to prove that there was certain economic hardship, but you had to have reasonably, you couldn't be doing better than you were doing before and then request a loan. Or in some cases, you couldn't have access to external funds and then request this loan as well. The government kind of took exception to that. These funds had to be used to retain the workers and pay certain utilities, certain non-payroll costs, such as mortgages, leases, utility payments. And then you had to document all of these types of expenditures for loan forgiveness. Some other requirements: the business had to have fewer than 500 employees per physical location. And I'm sure most of you have had or heard of situations where franchises were able to get loans in the millions because they had, each location was fewer than 500 employees. So, I mean, that's just the way the law was written. If you had 500 or fewer per location, you could qualify, and you qualified based on the payroll of that location. And when we count employees, we're talking about, it's just a count. How many full-time employees, how many part-time employees, and then how many other employees did you have that might be seasonal or other types of employees during that covered period that you're looking back to determine this 500 employee limit. And you want to take the average employees during the pay period, for each pay period for the preceding 12 months. So that's the way the original law read, is use the 12 months before your loan request. But then the instructions came out, and the instructions said, well, use 2019. So you could use either. So whichever one you did the calculations for, you could use the preceding 12 months, as our firm did, or you could use 2019, which if you got into it later after the instructions were out and so forth, 2019. A lot of people use 2019. So as I said, self-employed and owners of businesses did qualify under the PPP. If you looked at the original wording, you would probably think, no, only those businesses with employees would qualify, and that's how you would operate. But if you were self-employed, you'd use your Schedule C to determine what your income was, and then you'd be subject to the limitation, the $100,000 per limit on per pay period, annualized per pay period. Partners were the same way, and the same also for corporation owners. There's some other limitations with regard to corporation owners. With regard to loan forgiveness, the corporation owners may not be only limited by the 2020 compensation that they've given, but they may be limited by the 2019 compensation as well. And that was Some of those limitations were incorporated in the language to make sure that the corporations who had total control didn't have an employee that they would let the employee go in order to just give themselves the compensation and qualify for loan forgiveness. The whole purpose of the program was to keep employees employed, and so they wanted to take away the incentive for corporation owners to possibly get rid of an employee in order to make sure that they get a larger loan forgiveness. And so when you're using the compensation for these people, these owners, you would use, once again, either the preceding 12 months or 2019. So the loan, businesses could request a loan, and the loan was the lesser of $10 million or the average monthly payroll costs times 2.5. So if you're looking at this, this is very important. I want you to keep in mind. So it's basically 10 weeks with a little bit more than 10 weeks worth of payroll costs. And once again, you use the same period that we talked about, the preceding 12 months or 2019 for the calculation. And then another limitation would be you stop at $100,000 on an annualized basis for every pay period for someone. So if someone was making more than the numbers for each pay period, 8,000 something, I forget, 100,000 divided by 12 for each month, then that's the amount that you were limited to in determining the payroll costs. So that's how the program worked. The definition of payroll costs were wages, salaries, commissions, anything that looks like earnings for the employee, cash tips, all types of leave, vacation, parental, family, medical, or sick leave, severance pay. So there are a lot of ways that people could qualify for this, even though they weren't working exactly at the time, these employees, but this payroll would be included. Group health care benefits, that would be group health care insurance and payment benefits, not reimbursements, I don't believe. Retirement benefits were included, and state and local taxes assessed. Essentially, this is just taxes assessed on the payroll itself. So we're really only talking about unemployment tax. So in California, employers that are paying the unemployment tax in the state for their on their payroll on their employees, then that would be counted. And so that was, all of those were considered payroll costs under the original rule, but under subsequent guidance, bonuses were added. And this was a very important feature that was added because now, in order to make up the amount of cash that was paid out, you could actually pay bonuses to your employees up to that $100,000 annualized amount, or for self-employed people or partners, bonuses would count. Once again, you're limited by that $100,000 number. But this would allow businesses to make up some of the payroll, because if you look at the thing I had you pay attention to, the loan was based on 2.5 times your payroll costs, which is essentially about a little over 10 weeks. And you'll see in the loan forgiveness, the recovery period was 8 weeks. So right off the bat, we've got a mismatch. You're trying to squeeze 10 weeks worth of payroll into an 8-week time frame in order to make that work to get 100% forgiveness. Eventually that was corrected, and we'll go into that a little bit, but in the beginning, this was a major concern for a lot of businesses. If you didn't have any of those other costs, rent or lease or utilities, you just had payroll, it was going to be very difficult for you to get that 2.5 times payroll cost squeezed into an 8-week recovery period. Bonuses were one way to make that work. You had to use the funds to pay, obviously, those payroll costs and all of the other things upon which the loan was predicated. The healthcare benefits, interest on mortgages, rent, utilities, and so forth. And any legitimate debt that it incurred before the start date of the covered period, February 15th. So there was, once again, some additional guidance created what's called the alternate payroll covered period. And essentially, for those people on biweekly payroll, they could start at a different time from when they received their loan. So the covered period for a loan would start the day that you received the loan. So when the loan was approved, usually people got their money in their bank the next day. But that day started the covered period. And if your payroll didn't fall exactly right, you might have a payroll that falls outside that covered period. So this was one way that guidance was created to help align the use of the funds with the payroll that actually occurred. And they did this for biweekly payrolls only. So semi-monthly payrolls, you couldn't do this. Monthly payrolls, you couldn't do this. Only biweekly. And essentially, you would start then, for payroll purposes, your payroll use of funds would begin on the first day of the next pay period. So the first time you made a payroll after you received your loan would be the first day of that pay period, and then it would go out 8 weeks from there. Okay, now the sweet spot, loan forgiveness. So the first 8 weeks of these payments was in the original program, 8 weeks. Once again, you got the loan based on 10 weeks, and you're trying to squeeze that into an 8-week period. I was doing contortions trying to make this work. And I'm sure others were coming up with very creative ways to make this work as well. So the alternate payroll period helped to a certain extent. But what really helped was in June, the government came along and said, you know, we've heard a lot about this problem that has existed with the 8-week period. And they created, in the new law, a 24-week payroll period for these loans. So if you received your loan prior to June 5th, you could also use a 24-week payroll period. So the other things that are included in loan forgiveness would be any interest, rent, utilities, those types of things, and the payroll costs, once again. So some of the limitations. In the original law, 75% of the loan forgiveness had to be from payroll. So only 25% could be from non-payroll costs. And so that gave you some leeway, but if you had built your loan model on these non-payroll costs, then once again, you still had the problem of 2.5 times, trying to squeeze 2.5 times into an 8-week period. So this was also expanded to 60% of your payroll had to be, the loan forgiveness, 60% had to be payroll, and 40% could be for non-payroll costs. So this gave you much more latitude and ability to get loan forgiveness based on the 24-week period and this expansion to 40% being from non-payroll costs. So that helped a lot of businesses, or will help a lot of businesses receive 100% loan forgiveness. There was an issue dealing with in the payroll covered period, or not just payroll, but in the covered period, whether the costs were paid or incurred, what could be included. And so the government gave us guidance on this, indicating that you could include costs that were paid but not incurred. So in other words, you got the loan on April 3rd, but payroll had been incurred from March 28th to April 1st or whatever, and paid April 6th. That cost could be incurred. That was incurred. It was paid, but it wasn't incurred during the covered period. You could also include costs that were paid and incurred during the covered period, which is fine. That would be normal, but you can't double count a cost that was, you can't say, well, I'm going to bring in a cost that was incurred from before and paid now and double up. So you also were able to take costs that were incurred but not yet paid. So you could accrue the costs through the end of the covered period, as long as the payroll was paid by the next payroll date, or the expense, let's say it's a rent expense, it was paid by the next billing date. For all the non-payroll things, the next billing date would incur. So this was very lenient treatment. It allowed you to bring in those things that you had already paid during the covered period and give you a deduction for those things that had been incurred during the covered period. Now, in looking at the loan forgiveness, there were some reductions. So there was a reduction for full-time employees. A reduction in full-time employees would be a reduction in the amount of loan forgiveness. So if you had full-time employees that earned less than $100,000 annualized amount, in excess of 25%. So if the salary of any one of those employees, you look at this employee by employee, was reduced in excess of 25%, then you had to do a dollar for dollar reduction in the loan forgiveness for these employees. If you receive the $10,000 advance payment for the EIDL, that also reduces the amount of loan forgiveness. That's considered a payment that was made to you under the EIDL program. And some people did go out for that immediate advance payment of $10,000 and even got a full EIDL in addition to the PPP. So there was one benefit that was included, and that is for these types of reductions, if you restored these situations by June 30th, then that reduction would not count. And when at the June extension of the Flexibility Act, the act was extended to December 31st. So the covered period didn't end June 30th, it ended now December 31st. So we had longer time to use the expenses because of the 24-week period being created. And so you now had till December 31st to restore these FTEs. And there's some ways that you can go about saying that you've restored them. The same thing with the salary reduction. If you restored the salary of these employees who made under $100,000 on an annualized basis, then you would not have to reduce your loan forgiveness. So let's talk just a second about how you count FTEs. First, 40 hours or more per week. So if a person normally worked 40 hours or more, they were considered one full-time employee, one FTE. And there are two methods for part-time workers. So you could use the fraction of a 40-hour week. So if someone worked 4 hours a week, that would be 10%. That would be 1/10 FTE. Or you could just say all part-time employees equal a half a FTE. So do your count. You do your count based on the look-back period that you are using to determine the loan. And then during your covered period, you do a comparison count to determine if you had an increase or decrease in FTEs. So with the full-time employees, like I said, anything over 40 hours, if they work 50 hours, that would still just be one FTE. If they work 40, that would be one FTE. That's all that you do. So there were some ways that you could not have the reduction apply to you, some exemptions to the reduction rules. And that would be for any employee whose hours were reduced for, you gave them a good faith offer to restore their hours, or you offered to give them the same salary and hours back. And these offers were rejected by the employee. Or if that's the case, then the employer has to retain those records and notify the state unemployment agency within 30 days. But as long as you're trying to retain these employees by making the same offer, then you wouldn't have the penalty of reduction. Another series of exemptions would be if the employee voluntarily resigned, or if the employee themselves requested a reduction. If the employee says, listen, due to COVID, I got my kids at home, I can't work a full-time schedule. If you could, I really like working here. If you could reduce me to 75% or 50%, I'd really appreciate it. And employers that honored that worked out for them. If you fired an employee for cause, of course, you'd have to have all the documentation for that. Then that also you wouldn't be subject to the reductions. An inability to hire the same employee. So you're trying to hire the same employee and you couldn't, or you're trying to hire an equivalent employee, someone with the same qualifications, and you could not for one reason or another. That was under the new law. That would not make you subject to the reduction. Or if for some reason you were unable to return to the same level of business activity. And this is basically because the government shut you down due to government standards or OSHA or the CDC. Your business was not able to return to the same level. That might apply to restaurants or health clubs or bars, some business where due to the shutdown, you're not able to make that work. Okay. So let's talk a little bit about the forms. With the $50,000 limitation came a simplified form, which everyone was looking for. And the hope was that you wouldn't have to document anything. All you'd have to do is sign on the bottom line saying, okay, I did everything I was supposed to do, and that's okay. But unfortunately, that wasn't the case. You do still have to do a form. It's the 3508S. You don't have to show your calculations, but you do have to put down what your loan forgiveness amount is, how much your loan was, and so forth. But you still have to also provide some documentation, and that would be your payroll reports, and some of your non-payroll type of documentation to show the lender that how you essentially determined what your loan forgiveness would be based on. So that still has to go out. Let me talk a minute or so about lenders. So we use Boston Private, and they created their own portal. So when the SBA came out with the new ruling on $50,000 or less, if you went out to Boston Private to try to do loan forgiveness, you found that the portal had not been opened at that time. And they came out with guidance saying, well, we're working with SBA to try to come up with an application that we can use to provide you with this loan forgiveness. So each bank had its own process. Some banks were using the actual forms from the SBA, and you just submitted the form filled out. But some banks created their own portal. And so you'll have to follow the rules of that institution where you receive the loan, because they are going to have to do some due diligence in looking over your documentation. And so they've got up to 60 days to look over your documentation before they submit the loan forgiveness to the SBA, and then the SBA will make its determination. So there is still documentation required, unfortunately, but there's much less documentation, and this is a much simplified form. The downside to using the 3508S form would be for anyone who has a reduction due to the salary being greater than 25% or the FTEs, and you want to use one of the exemptions to exclude you from that reduction. You cannot use the 350S for that purpose. So you want to, this is a great form for someone who received 50,000 or less, and it's all based on payroll. There's no changes in FTEs or salaries. It's basically a stable operation. You know, whether it was 8 weeks or whether it has been 24 weeks, this is a great form to use. It's very simplified, and I would encourage you to use the 3508S.
Okay.
But if you do have a reduction, then you're going to want to use the 3508EZ. I'm sorry, they, do I have this right? 35, no salary reduction greater than 25%. I'm gonna have to check this. Now I've stumped myself with these forms.
The easy and the S, Lonnie.
3508 is the one that you'd have to use to get the salary reductions, the eliminations in there. So the 3508EZ is just another form that was created. It's a much simpler form to use than the 3508, the basic form. And you can't have you can do it for sole proprietors with no employees. This would be a great form for them. I have here, I'm still looking at this and I'm trying to figure out, I've stumped the stumper. No salary reduction greater than 25%. I'm saying I thought you could use it for this, but I'm not sure now. I'll have to look that up in a second. And if you're unable to operate due to a CDC or other governmental restrictions, then this would be the form to use for that purpose. And then you have the original form, the 3508, which is full documentation. You show the full documentation and calculations of the loan forgiveness, and all of that information is provided to the banker or whoever you took the loan out with, in order to have them certify that you have made all of the correct documentation for loan forgiveness. So, Kim, are there any questions out there while I look up?
So I don't have any. We welcome questions from those of you that are watching. I have a couple just from conversations that I have had with members of our business community over the last few months.
Mm-hmm.
I'm assuming that what you were saying as far as the restrictions would, like the county guidelines and restrictions for COVID would be those for like nail salons and things that would allow them to be exempt in this unable to operate category.
That's correct. Mm-hmm.
There's one business that I know of that was sold during the pandemic time. So from like middle of March until now. And the previous owner had taken out a PPP loan. Now the new owner, which is, really facing the challenges of the pandemic, seems to be unable to take out a loan. Well, and then now the period of taking out a loan, I believe, is closed. Is that right?
Yes. Yes. Mm-hmm.
Okay. Well, that was one of the questions that I had is there any hope for that new owner to be able to access any kind of loan funds?
Yeah, right now the first 350 billion is gone, and then they opened it up again. I forget, 200 billion or something like that. But the period for requesting PPP loans is now expired. And so the only other alternative until Congress acts, and we can only hope that Congress will act to provide another round of stimulus. There was money that had not been used. I believe about 50 billion of the first 350 billion had not been used. And I don't remember seeing any numbers on the 200 billion, how much of that had been used. But there are monies that are available. They keep talking about having 100 billion that hadn't been spent. So I'm assuming maybe it was 50 billion each. If they do nothing, they could open up a program and allow small businesses to make that work. But we're relying on Congress to have to do that. And they were not, before the election, they were not in any hurry to do anything like that. So we'll have to see. This business could also go to the SBA and try to get the EIDL if they have employees. They could do that. And that's a very low interest loan. The guidelines were reduced significantly to allow more people to get those loans. So that would be an option. It's not a forgivable situation, but it would be a low interest loan.
Right. Okay. The other question that came to mind as you were going through your slides, Lonnie, was related to the staffing and the FTEs. So say you have a business and maybe 2 of the employees ended up not returning because they, accepted a role somewhere else because of the limited number of hours that were available with the original business. Mm-hmm. You would not be penalized then for not having them in your FTE count. Is that correct?
So when you did your original FTE count, let's say they were full-time employees. Right. And then you reduced your, due to the pandemic, you reduced your level of work down. So any reduction in hours as a result of reducing your business, that would not be, we'll call it a haircut, or we'll call it a reduction. You wouldn't be penalized for that. But if there were, let's say they were half-time people, and they left and got another job because it was more stable than your business being shut down back and forth. As long as you make an offer to them for the same employment that they had before, and they reject the offer, then that would be one exemption against the reduction in FTEs. So it's a person-by-person situation. But yes, the key is you try to hire them back in the same position that they were in before for the same pay. Then those are clean. There's no reduction as a result of either of those situations. And for those people that, and I guess I didn't mention this, so if they were making one salary, but their hours were reduced because business, had to reduce hours, you don't have to take a reduction in reduced salary for them because that followed the hours. You'd only look at one or the other, whether or not there was a partial FTE reduction that you'd have to account for, and any exemption against either of those would work.
Okay, that makes sense. Those were the only 2 questions I have.
So let me clarify. I do want to clarify. So I had it right. It's the 3508 would be the situation, the form that you'd have. If you had a salary reduction that was greater than 25%, you have to use the 3508. You would not be allowed to use the 3508 EZ.
Okay.
So the slide was correct, and I couldn't remember.
Thanks. No, that's fine. Oh, yes, I see one question here. Please clarify which form to use. So maybe if we go back to those slides then, Lonnie.
Okay. Do I have to share again, or what do I do?
Yeah, I would share.
Okay.
There we go.
There we go. Okay. So let me.
Thank you, Michael Wagner.
And Michael, I'm sorry, I stumbled all over the 3508 EZ because I jumped ahead to the 3508 in my mind. So the 3508S is used if your business has the small loan, $50,000 or not exceeding $50,000. And once again, it's very simple, very straightforward. You don't have to show any calculations for your forgiveness, but you do have to certify some things. So there were some certifications that you had to make on the form. And essentially you certify that you use the loan for all of the stated purposes of the loan that we talked about, and you used it in the covered period, either the 8-week period or the 24-week period. And they weren't used for any unauthorized purposes, and you're verifying that you submitted all the proper documentation to the lender and that the documentation was true and accurate. So essentially, whoever is guaranteeing the loan, whoever filled out the loan application, just has to certify that they've done all the things that you'd have to show for essentially additional documentation for. Now, as a business, you'll have to keep all of that documentation in case the SBA comes back and say they want to audit this. They don't call it an audit, but they want to check your documentation. You will have to keep all that documentation. You just don't have to submit it. And then with the 3508EZ, that's a form that sole proprietors with no employees can use to apply for loan forgiveness. You cannot use it for salary reductions greater than 25% or the FTE reductions. In order to do that, you have to use the full form, show the calculations of the FTE reduction, and then state that you want to ask for a reduction in the exemption for one of those reasons that I stated earlier. And once again, if your business was unable to operate due to governmental action, then you would be able to use this 3508EZ. And then everyone else is subject to using the full form with full documentation and calculation shown with the lender.
Great, that's really helpful. Yep.
Okay, are there any other questions?
Thank you.
Okay, thank you.
Got it. I don't have any other questions popping up here, Lonnie.
Well, this is a very, as I said, by showing you the timeline. You know,
that's it for questions. So I think we can wrap this up. All right.
Anything else, Lonnie, that you would like to share, or things that our businesses can be doing to make this process as easy as possible?
Yeah, I mean, this might be a good time to go into a little bit of the strategy in working these things out. So I would say if you're a business and you have only payroll, and I'm in a little organization, all we had was payroll, there was no rent or anything else. Squeezing the 10 weeks into 8 weeks was a little bit difficult, but once it went to 24 weeks, I mean, we're easy to go. Under $50,000, you can probably file for loan forgiveness and not worry about the government coming out with some other guidance that's going to impact you. I mean, the key is you only get one shot at loan forgiveness. And so you want to make sure that your application is going to be complete and it's going to be bulletproof so that you get the loan forgiveness for the maximum amount that you can apply for. And then you've got a 1% loan for the rest. But you want to try to get 100% of loan forgiveness. And they've made it with some of this later guidance and changes to the law. They've made it as easy as it can possibly make it, so 60% max minimum from payroll, and you can really make do. You can squeeze all of that in. You've got a 24-week period to capture all those costs. So that would be the situation to try to wait until you've completed the 24-week period. You know that, all the expenses that you've made, and then utilize the correct form to make that work. Now, if you have a reduction due to FTEs, you have until December 31st to try to restore those FTEs. So if you have a reduction in FTEs, I would say, why would you look for loan forgiveness now, unless you can cover up the FTE shortfall with some extra expenses? I'm not sure you can make it work, but sometimes you can. You have to just run the numbers. But I would wait and try to restore those FTEs by December 31st. And so there's no hurry. I mean, you've got time after December 31st to make the loan application. So you want to make sure that you wait for the most guidance that the government's going to give you that's going to be in your favor. You want to utilize the rules to the best of your ability so that you're going to get the most amount forgiven. And the same thing for the salary reduction is both of those. First, you look for any exemptions that we talked about. See if you can utilize one of those. See if you can rehire, people to try to cover for the fact that you have a reduction in those FTEs.
Okay. So you said they have until December 31st to restore the FTE count. And what is the deadline then for applying for forgiveness?
Oh gosh, I don't have the actual date, and that's a good question. I don't have the actual date in front of me, but I don't see it. I'm sorry. So I'll get back to you. Do you post something? Maybe
Sure.
on the chamber website or something like that. Okay.
Yep, we can follow up with information. This video will be available, and we can share the slides as well as other information. But it sounds like it's not a looming deadline.
No,
so.
It's I have a date in mind, but I don't want to say it.
Okay.
It might not apply to this loan.
Sure. Well, I really appreciate your willingness to share your knowledge with the Los Altos Chamber, Lonnie, and the support that you've given the Chamber in all of our events this year. It's been a tough year for our businesses and then likewise for the Chamber. So we really appreciate the support of Young Craig and Company and of you personally and your willingness even to join us here today and to support our business community.
Well, it's been my pleasure.
Thank you.
Thanks for all you're doing for the community.
Thank you, Lonnie. That's all. So we'll get this posted. And again, if you have any other questions, don't hesitate to contact us at the Chamber. And thank you for joining us today. All right, have a great day.